What is going on, traders? This is KOJOFOREX, aka GBP Legend, aka Sniper Trader, aka Market Assassin, aka King of Blues. It's been a long time I dropped any new YouTube video because I've been preparing to drop one of like dopest content you guys are waiting for, which is how to trade gold like a bank. Yeah, so for a long time I promised you guys I'm going to be teaching you how to trade gold like a bank, but I think this is the right time, starting of the year, to propel your knowledge into the insight into how to trade gold really like the banks do, right? So let me also give you guys a little bit of insight into the idea into trading gold. Yeah guys, so talking about gold, right, a lot of times people think about gold like the way we think about the other currency pairs, right? There's a way in which you have to think about the nature in which gold moves with respect to its pricing than comparing it to the regular currency pairs that we trade, right? You must understand that gold is more like a metal classified as a commodity, right? So on a normal or regular, gold is not an exchange rate. Gold is traded in pricing, right? So gold, you'd see gold selling at 1400, 1500, 1600, you know, and so on and so forth, right? So as a trader, to get the best of idea into how to trade gold, you must think about it as you really going into the real gold market and looking out for the best possible price to gain a best bargain for gold, right? The fortunate thing about us is that as traders, we're able to get technical analysis to be able to tell us the best entry point into going in to go long on gold, or the best entry point into going in to go short on gold, while we are considering it solely on the basis of what? Price movement, not necessarily exchange rates, right? You should really get the difference between what I'm saying, which is understanding gold with respect to price movement as to exchange rate, right? So let's go into the chart. I'm going to break everything down and then make you guys understand my perspective into how I trade gold like the banks do, finding the refined entry at a premium or at a discounted rate to be able to get a good entry point in the market, right? So let's go into the chart and I'll show you guys pretty quickly. Yeah guys, so like I promised you, I was going to teach you guys how to trade gold like the banks actually do. So currently, if you're watching, this is my gold chart on the monthly time frame, and then on a monthly time frame we can clearly see that gold on TradingView has allowed us to be able to view gold on a monthly time frame since when it started trading, all the way from March 2006 to I think the end of this year, which is 31st, now 1st of January 2021, right? So now we're currently on a monthly time frame. Like I told you, we're going to understand trading gold more like price range in terms of commodity it is, than normally thinking about it like an exchange rate, like the way we trade the GBP USD and then the GBP JPY and the rest like that, right? So because of that, in my advanced lesson, which is Sniper Entry Sessions, I teach people how I mark up my gold, right? And it's really relatively different than any other thing you have seen on YouTube or even read in any book or any other course you have might have purchased, right? So I would usually classify my gold ranges in specific rounded number, and a round number is actually usually would find a fine-tuned level of what support and resistance in the market, just like the way the banks will think about it, right? So imagine being a major bank like Goldman Sachs or JP Morgan, you wouldn't necessarily want to buy gold at a price range of, let's say, random number like 1639.59, right? Or let's say a random number like 1446.83. They would usually like to buy gold in price range of, let's say, 1,200 and hold it all through to maybe 2,000 to 1,600, 1,700 or 1,650 and stuff like that. So as a retail trader, following through the trail of these smart monies or smart traders with high or huge liquidity, you want to be using confluences of other informations, you know, like the trend line, like the candlestick formations, like psychological levels, and then interesting levels in the market like that, to follow through the line of these big players and be able to trade along with them, right? So the idea of this lesson is to teach you how to trade along with these big players and not necessarily be involved in their everyday activity of their trading, right? So it gives you the insight into what they are doing, right? So with respect to that, I'm going to give you guys a full back test all the way from 20 2018, I think November there on, to 2020, and then let's have a very bigger picture and perspective of how gold has clearly played out. And I'm going to do this on the 4-hour time frame. So without much ado, let me switch to the 4-hour time frame, and then let's see what we can have. So you can see that I still don't have my markup on it, right? But before I even go on the 4-hour, let me switch back to the monthly and then show you guys how my markup for gold really works with respect to explaining to you that I like to find gold using rounded numbers. You can see that I would have like a lot of numbers ranging from 1,000, 200, 1,250, 1,300, 1,350, 1,400, 1,550, and so on and so forth, right? So switching back onto the 4-hour time frame, right, it's not going to make it look extremely clumsy as it is, because obviously I was in the monthly time frame, so you're looking at it in a different angle. But looking at it from the 4-hour, you can see what we can have a different perspective of how the market has been reacting on all these levels. So like I said, I'm going to be doing a back test with you guys all the way from 2018, so that we see the evolution of gold and then how it has played out with respect to my cycle level, my markup, and then how I have continuously traded it like the banks actually do. So yeah, early on in the year 2018, when I was still extremely active in the market, most of you didn't even know me, and then this YouTube channel wasn't even in my plans, right? I was watching gold and then trading the same way I traded today, right? So if you watch from 2018 October there on, right, as much as I want this video to be long, I'm going to be rushing a little bit, so catch along, right? So now you understand the markup. You can clearly see that 2018, before gold actually took off that bullish massive run up to where it is with its current price, right, we had a whole lot of accumulation within this range, right? And then gold spiked up, right, came back to collect some more orders. And then where did we collect these more orders? It collected it exactly on the price range of 1,200, as you guys can see on the right side of my chart, right? So from 1,200, what did gold do there on, right? Let's follow through the chart. It rallied all the way to 1,250 and then pulled back a little bit from 1,250, gathering enough momentum to even push further on, right? So as a smart trader, looking at gold from the angle of the way big institutions trade, I would be looking at its specific reaction within this range, where I know that big players like to play around these psychological levels or this institutional range of 1,200, rounded number, good pricing as a good discounted rate, right, for gold to enter into the market again. And that would be where I would find my entry, right? Moving on, we can see that after I traded, it went close to hitting this 1350 area, even though it didn't come exactly to tap into 1350, and then we can start seeing that gold started making these kind of wedge formations within this range, right, before a pickup. So now what we are doing is I'm just giving you a clear perspective of what gold has done before we even go into how you can trade it as the banks do, right? So now I believe from now you're already getting the whole picture and the whole idea into how to think about gold, right? And then the kind of way in which it reacts around these kind of psyche levels that I'm introducing you guys to. But the interesting thing is even yet to come, right? So you can see that after that kind of a wedge formation, right, a falling wedge, and then gold starting to rally all the way on the upside, right, we started to have some level of consolidation within this range of 1,400 and 1,450, but it necessarily did tap exactly on the 1,450 before pushing back down. Now we're still appreciating the psyche levels with what we are doing, right? After that consolidation and a massive push on the upside, where did gold hit again? It went all the way to run into this 1,550 area. And then what can we observe in this 1,550 area? Another falling wedge, and then a tap into the 1,450 area before another bullish run on the upside, right? So now let's see what that bullish run on the upside also presented us, right? So on that bullish run on the upside, which was somewhere in latter part of 2019, which I called out, right? I called gold for 1,500 pip all the way from 1,450 to 1,600, and a lot of people made incredible amount of money for a few people that used to follow me on Instagram. So you can clearly see that we hit that 1,600 and then pulled back to reaccumulate some orders on the 1,550, went all the way back, pulled back to 1,550, and then where did we head towards next? All the way to 1,700, right? So you can clearly see that with this footprint that I'm showing you, big players have a way of hiding behind these cycle levels that retail traders do not know about. Here is a period in time where we had massive global lockdown and corona was affecting the whole world, where gold literally dropped, and I mean you can clearly see the whole damage that was caused on the market with that corona effect. And then we can clearly see gold dropping all the way back into that 1450 to come and reaccumulate some more orders. Everybody thought gold was going to crash. This was the end of it. And then we can quickly see how these big players made gold pick up quickly, right? So very interesting. So if you look at what I've taught you from the beginning of the gold evolution from 2018, this rally on the upside, wedge formation, consolidation, rally on the upside, another wedge formation, run into 1700, pulled back into 1450, reaccumulated some more orders from 1450, and then did what? Let me quickly reverse it and then we see what we're doing. Reaccumulated some more orders on 1450, and then from there on we can clearly see what we run into that 1750 area, pulled back into 1700, and then finally made this massive high around the 2050 area. So from 2050, what has gold do has basically been in this kind of stuck in this wedge formation again. So within this formation, I can clearly see that there are possible scenarios around here for my insight into gold, which is a possible maybe break on the downside again, come and accumulate some orders, maybe a double bottom here, right, before maybe a big push on the upside again, or maybe it could actually tap into that 1840 area, use that as a major support level to hold on. Anything can happen, or for gold can literally just break out from this range and then start heading on the upside. But with respect to my analysis and my perspective, I expect some level of break on the upside in the longest term for gold. It may not be in the next month, next 2 months, but I see a massive bullish move for gold in the next couple of months, right? So now that we understand the evolution of gold from 2018, now let me tell you guys, or let me spill into details how you can be able to take advantage of gold with respect to understanding its trading in this in these levels, using these psyche levels, and then drilling all the way down into the 4-hour time frame, and then finding that entry criteria, and then what you could have done to capitalize on the full move of these opportunities, right? So I have taught you guys market structure, I have taught you guys Fibonacci, I have taught you guys a little bit of insight into what I teach people that pay money, right, for free on YouTube, right? And then now I'm teaching you more insight into gold as well. So you may want to do your very best to smash the like button and also to click on the link to subscribe to this channel so that I get motivated to even drop more content for you guys from time to time, right? So looking at gold back again, like I said, within the range of what? Now I'm going to start from let's even use the most current pricing ranges for gold, and then how we could have capitalized on all these big moves that have just run across. So you can see that the highest price overall that gold had ever traded was around that 1450 area. So as a trader, me looking at gold coming into this prime range of 1450, right? Remember I told you guys that support and resistance is not a price point, but it is a range. So I would only be looking at gold within this range, right, as the possible reversal point with respect to what the candlestick reversal pattern that I'll be seeing within this range, which is something again that I teach to my sniper student, right? So you can see clearly here that with my sniper student who can identify the reversal formation that would have been using to capitalize on, we could have potentially find an entry within this range, put a stop loss here, understanding that gold is rejecting within this area, and then we could have made what a massive, initially would have definitely looked to take profit around this 2000 area, but understanding for a fact that we can protect our trade and then let the trade run, we could have capitalized on this massive impulsive move here, which ran all the way for about 2000 pip on gold, right? Thereon, we can easily revert our position, come back into the market by finding a hedge long, right, with respect to what we would be looking at within this range, right, on the lower time frame, maybe the 30-15 minute, right? But I do not want to go too deep into that now. But nonetheless, the second wave of movement after that pullback, right, I taught you guys in Fibonacci that when the market makes a move, it pulls back before continuing in the same direction of that move. So you can see what this is, what the A, B, C scenario, right? So considering that A, B, C scenario, what Fibonacci range did the market pull back into? You can see that if we plot from our fib from this level all the way down into this level, right, gold was literally rejecting within the fib range of what, 78.6 and then 61.8 in confluence with the psyche level of 2000. You can see that clearly. Initial impulse, it was around the 2050, pulled back down and then reverse out into that 2000 region before a pullback down. Again, we can be able to identify some reversal formations within that 2000 area, which, like I said, I teach to my student, inner circle student, right, to be able to capitalize on these full moves in the market. So here we would have been able to find an entry here, again putting a stop loss right above the range, initial take profit on this first level, and then subsequent take profit as far as gold could go, and then that would have made us about another 1000 pip on gold, right? Thereon, we'll be looking to capitalize on gold from a strategy that I taught them with respect to a trend line, but you can see that here a trend line literally doesn't play out. Market structure breaks and then the market starts to head up. Market structure breaking doesn't mean the trend has changed, right? Which is something that I taught you guys when I was talking about market structure video. So if you haven't watched that video, go into my videos and then go look for how I use market structure to find sniper entries. Here again, what can we do? We can use Fibonacci to also anticipate possible retracement move. We can see that gold here literally tapped on that 78.6. Again, we can be able to identify some reversal indication within that range, and then we could have capitalized on this move also onto the downside, right? Onto the downside. So as you can see, I have been able to teach you guys a change perspective. So here's what I'm talking about: A, B, C scenario, right? And then again, we had another A, B, C scenario, right? With respect to gold rising in this kind of formation, right? A mini rising wedge, right? And then if you plot a Fibonacci again within that range, let's see. So it's a rinse and repeat thing going on here, right? A very incredible, insane thing really going on here, right? Rinse and repeat, right? Where's the fib retracement again? Still within that 61.8, 78.6 retracement range. And then what can we identify within those ranges as well? Some reversal indications that gives us the opportunity to jump in short on gold again, and then hold this thing all the way down to make as much as about another 1000 pip. As a swing trader, you should be comfortable with holding your trades, right? So in and out, I've been able to teach you guys how you could have been able to capitalize on first swing move on gold, second, third, and then fourth move on gold, right? Let me even display that out clearly for you guys to understand how incredible this thing is, right? First swing move, we know how we could have got a trade on it. Second swing move, third wave, and then even the fourth wave of movement on gold, right? So with the fact that I do not want this video to be long, I'm going to end this session here. If I see more demand into what more I could teach you guys on gold, I'll do a part 2 of this video. I hope you enjoyed this little bit of short insights, and if you did enjoy it, definitely smash the like button, subscribe to this channel, and then drop your comments with respect to any questions, right? And then make sure to also click in the link in the description to join the Telegram channel. You can get direct access to me to also ask me any further questions. So I'll see you guys definitely in the part 2 of this video or in the next YouTube. Yeah guys, so I believe this video totally blew your mind off and then totally elevated your level of understanding into trading gold into a whole different level. If you really enjoyed this short video, smash the like button. Make sure to also click in the link in the description to join the Kojoforex Telegram community, where I'd actually be dropping a lot more of gold signals. Also, make sure to follow me on all social media at Kojoforex, KOJOFOREX, on Instagram, Twitter, Facebook, wherever it is, right? And even quite recently, I joined Snapchat, and then my handle for Snapchat is KOJOFOREX1, right? Also, make sure to stay away from any comments that leads you on to message them for any investment and whatever it is, right? So without much ado, if you really enjoyed this content, like I said, make sure to smash the like button, guys. It really helps me a lot. And if you're new to this channel, make sure to subscribe so that when I drop any video, you will be notified by also clicking on the notification bell. So I'll see you guys in the next video, which is going to be how to trade US 30 and NASDAQ like the banks do. Peace out.